Welcome to another deep dive. This time we're getting into some stuff that might be super relevant if you've ever thought about employing your spouse.
Especially, yeah, if you're running a small business or maybe even a farm.
Right, exactly. We've got a whole stack of interesting sources here, some court cases, IRS rulings, even some marketing materials.
Yeah, from the early 2000s, like 2001, 2002, that kind of time frame.
Yeah, and it all basically boils down to, can you or can you not deduct medical expenses
Right.
for your business?
Exactly. It all comes down to that. And, especially back then, there were some pretty strict limits on what you could deduct.
Okay, so let's start there. Like, set the stage for us. What were the rules back then? Like, why were people even trying to do this?
Well, so imagine if you were self-employed. Back then, you couldn't fully deduct all of your health insurance costs.
Right.
You could only, write off maybe 60, 70% or something like that.
Got it.
And then on top of that, any medical expenses you had that weren't reimbursed, you could only deduct the amount that was more than 7.5% of your adjusted gross income.
Oh, wow.
Yeah, so all the money you made that year.
Okay. So that makes things pretty tough, right?
Yeah, it made things pretty tough. But there was kind of a loophole. Payments that you made to employees for benefits like medical benefits, those were fully deductible.
Ah,
So
okay.
you can kind of see where this is going. People started thinking, what if I just employ my spouse?
Right.
Set up like a medical reimbursement plan. Can I deduct more that way?
That's clever, but I feel like the IRS probably had something to say about that.
They definitely did. So there's this IRS ruling, Revenue Ruling 71588.
Okay.
And in this ruling, they basically said that a sole proprietor can deduct these reimbursements like under a health plan.
Really?
But, and this is a big but, the spouse had to be a bona fide employee, like actually a real employee.
Okay, so that's where things get complicated, I imagine.
Exactly. It's not enough to just, write their name down on paper. It had to be a real job.
Right.
And that led to some pretty interesting court cases.
Uh-oh. This sounds like a recipe for trouble. Tell me more.
Yeah. So, for example, there's this case, the Shalitos.
Okay.
They were a farming family from Kansas.
Okay.
And they kind of went head to head with the IRS over these very deductions back in 2001 and 2002.
Wow, so a real family taking on the IRS. I'm already hooked. What kind of farm did they have?
So it was a pretty decent-sized operation. They had about 2,300 acres that they leased, and then another 47 that they owned.
Wow.
And they were raising cattle, growing crops, the whole 9 yards.
Sounds like a lot of work.
Yeah, Mr. Shalito, he was really the one running the show, making all the decisions about the business, managing the work.
Okay, and what about Mrs. Shalito?
So she had been working on the farm for a while,
Yeah.
since like the early 80s, putting in, a good 40 hours a week.
So they were both like really involved in the business, like a true partnership.
Exactly. And when they decided to go with this medical reimbursement plan thing, they, really wanted to do it right. So they talked to their accountant, and they even bought this whole program called Agri-Plan Biz Plan.
Agri-Plan Biz Plan. What's
Yeah.
that?
So it was basically this program specifically marketed to farmers to help them set up these kinds of plans.
Ah, so they were like following the instructions, trying to stay above board.
Exactly. I mean, they really thought they had everything covered. They had an employment agreement. Mrs. Shalito even kept a work log.
Wow.
Yeah, they opened up a separate bank account just for her,
Yeah.
and they meticulously documented all the payments.
But I have a feeling the IRS still found a way to cause problems.
You guessed it. The IRS wasn't buying it. They ended up challenging whether or not Mrs. Shalito was actually a legitimate employee.
Really. But they had the agreement and the payments and everything.
Well, so she was getting paid like $100 a month in wages.
Okay.
Plus, reimbursement for the family's medical expenses. But the IRS, they focused on the fact that the money for these payments was coming from their joint checking account.
Wait, so because they were sharing a bank account,
Yeah.
that somehow meant she wasn't really an employee?
That's essentially what the tax court said. They argued that because she was, a joint owner of the funds in that account, the payments couldn't be considered real compensation.
It just seems, I don't know, like a technicality.
It does, right. And then, to make matters worse, they even brought in this Kansas legal concept called the Doctrine of Necessaries.
The doctrine of necessaries. What's that?
So it's this old legal idea that says a husband is legally obligated to cover his wife's medical expenses. So the tax court used that to say that when Mrs. Shalito was paying medical bills, she was just fulfilling her husband's legal obligation, not like a real business expense.
So wait, they were being penalized for being married and sharing a bank account? That
Well-
just doesn't seem fair.
Yeah, it definitely seems a little bit like they were picking on them for a technicality. But thankfully, the appeals court, they kind of stepped in and they overturned that tax court's decision.
Okay, good. So someone saw things a little differently.
Yeah, thankfully.
So the appeals court came to their rescue. What did they say?
Well, basically, they said, hold on a sec. This doctrine of necessaries thing, it doesn't really make sense here. They pointed out that Mrs. Shalito was actually earning money from her husband's business, and that's how she was paying for her own medical expenses.
Right. So she wasn't just like a dependent relying on her husband. It was more like a business transaction.
Exactly. They were recognizing that she was making a real contribution to the farm, and they didn't stop there. The appeals court also questioned that whole joint checking account thing.
Oh, good. Because that just seems so unfair.
Right. They cited other cases where using a joint account didn't automatically disqualify someone from being a legitimate employee.
I'm glad to hear that. So it sounds like the appeals court was trying to look at the bigger picture here, not just focus on these little details.
Yeah, they wanted to know, was there a real employment relationship, or was this just some kind of scheme?
Right. Substance over form.
Exactly. And they ended up sending the case back to the tax court.
Oh, really?
They basically told them, look, you need to reconsider this whole thing. You need to figure out whether Mrs. Shalito was actually being compensated for her work. Don't get hung up on which account the money came from.
So the Shalitos got another chance to prove their case. Did they win? Did they get their deductions?
Well, unfortunately, our materials don't actually say what happened in the end.
Oh, bummer.
But it's still a really good example of how complicated these tax strategies can get.
Right. It sounds like one little detail could completely change the outcome.
Exactly. And, the IRS's approach in similar cases, it hasn't always been consistent.
Inconsistent? What do you mean?
Well, there were a bunch of other cases around the same time where people were trying to do similar things, deducting medical expenses through spousal employment.
Okay.
And in some cases, the IRS didn't even mention the joint account thing at all.
Really? So sometimes it was a problem and sometimes it wasn't.
Yeah. It's kind of hard to tell what they were thinking. And then there were even cases where the taxpayers actually won.
Oh, wow. So what was the difference there?
It seems like the key was really good record keeping.
Makes sense.
Yeah.
So if you can prove that everything was legit, then you have a much better chance.
Exactly. And, all of this was happening before self-employed people could fully deduct their health insurance costs.
Right. That changed a few years later.
Yeah, in 2003. So back then, the stakes were even higher.
It's amazing how much things have changed. So even though this specific case might not be relevant anymore, are there still some broader takeaways for our listener, especially if they're thinking about hiring their spouse?
Absolutely. The Shalito case is a perfect example of how things can go sideways, even if you think you're doing everything right.
Okay, so what should our listeners keep in mind? What are the big red flags?
So the big thing is the IRS, they're going to be watching these types of situations super carefully.
Right, of course.
They want to make sure it's like a real job.
Not just some trick to avoid paying taxes.
Exactly. Like substance over form, right? You can't just have the paperwork. You got to have a real job with real responsibilities.
So no make-work jobs for your spouse.
Yeah.
Just so you can get a deduction.
Right, exactly. And this is where all those records the Shalitos come in, like the work log and all the payment documentation.
Right. Being organized is key.
It really is. And it might seem obvious, but make sure you have like a written employment agreement.
Yeah.
That spells out everything, the terms of the employment.
Yeah.
Not just a handshake deal.
Right. So keep it official. Keep it all documented. And if this might be obvious too, but tax laws change all the time.
Oh, yeah. All the time.
Yeah.
It worked a couple years ago. Might not work today.
So it's important to stay up to date. Read up on the latest changes.
Yeah.
Maybe talk to a professional.
Absolutely. A good tax advisor can be super helpful. They can help you figure out all the ins and outs, make sure you're doing everything right.
Definitely worth the investment to avoid headaches down the road.
For sure. So basically, be proactive, be informed, and get some expert help if you need it.
Sound advice. So as we wrap up this deep dive, did anything in particular stand out to you about the Shalito case?
You know what I kept thinking about? All the other stuff that could come into play when you're employing your spouse.
Like what?
Well, we were just talking about federal income taxes, right?
Yeah.
But what about state taxes? Every state has its own rules.
Oh, that's true. We didn't even get into that.
Right, so there could be a whole other layer of complexity there.
That's a great point. Something for our listeners to definitely explore further.
Exactly. This deep dive, it's just the beginning. There's always more to learn.
Always. So keep digging. Keep researching.
And who knows what other fascinating stuff you might uncover.
Well said. Well, we've reached the end of our deep dive. We hope you found this journey through the world of spousal employment and taxes both insightful and a little bit entertaining.
Yeah, hopefully.
Always remember to stay curious, keep asking questions, and never stop learning. Thanks for joining us,
Yeah, thanks for listening.
and we'll see you next time for another deep dive.